What up, traders? What up, investors? Ken here from Dyslexic Investor. And yes, you are reading the account properly here. This is an individual within the Wall Street Bets form who basically deposited a 5K instant deposit into his Robinhood account. So he was able to play the Tesla earnings call that happened just 24 hours ago, placing a bet of the 500 call price to come in. Again, for this Friday, of course, that didn't happen. You see that his account is defected. Basically, you see it down at a substantial amount of being down $2,600 again on top of the 5,000, and then of course it's being down in the negative of 3,722%. So clearly, someone doesn't know how to do math over there. Within that app, again, some kind of defect going on. Of course, the comments down below have been very helpful. iRobot001 says, report your account being hacked, smiley face. That's definitely an interesting bet to be like. Of course, Robinhood folks are sometimes not the most sensitive to your issues, so be very mindful of that, folks. And we're going to be looking into the reason on this overall bet was very much a YOLO bet and really created an issue for the overall play, looking at the probability, looking at the IV crush, and looking at the underlying strike price that this individual took. That being said, I think that this individual had some kind of sense on really YOLOing this call and really just getting punched in the face, lack of better words. So without further ado, let's go ahead and flip over to the fantastic charts here. Again, within Thinkorswim, we're going to be also looking and analyzing this via the charts on Tastyworks, was again is the link down below if you're interested on switching from Robinhood, Webull, or whatsoever into Tastyworks account. Again, affiliate link down below, folks, there. All right, so looking here at those call options. Again, here's the stock again. The Tesla delivered a lot of cars, a lot of gross margin, great updates on Germany or Berlin factory, and then of course Texas as well. And again, it's growing revenue. That being said, earnings per share beat and revenue beat, but the overall underlying stock didn't move that much because, again, there's still some downgrades coming through for whatever reason. It's still not in the S&P 500, whatever negative skew you want to put on it. It's just been hitting this wall here around that 460 to 470 range where it just has not been able to get above. And after I was trading, I was really bouncing around quite a bit here in the options or the after hours market, even pre-market, and then of course when the earnings came out on, again, 24 hours ago, basically, this was definitely a very volatile stock. That being said, I think that some folks have really just been tainted by Tesla, lack of a better words, in the sense of this huge crush they had up here on basically going from like 275 or basically when it was back then all the way up to that 500 limit, basically when it was around like $900 or whatever, and then it ran up to like well over 2,000. And then ever since the split, it's just been in Kangaroo City, just bouncing around, not being able to get out of its own way. So this is, again, concerning in the sense of you're a little bit just trading shorter dated options. Of course, this individual was buying the 500 call option, so that was substantially at its previous high, looking for that to basically have for him to print money. Of course, sadly, that did not happen, and it really got annihilated with the IV crush. And what do you mean by IV crush, Ken? It's not, I'm not talking about the soda here, which I haven't had in years, but we can add this little tool here on, we can add the implied volatility. So this is basically going to give us the sense of what is going forth here. So we can kind of look here on a smaller time frame. Let's look at like a hourly time frame. Of course, you can see that IV going into earnings was way up here around 70-ish points. Again, that's you'd have to multiply it by hundreds. Again, it's around 78%, 80% going into earnings. Of course, going into earnings, again, it's a huge expected move. There's a lot of friction that could be going up, down, left, or right. So these quarterly earnings is usually something that really the implied volatility builds up into, or some kind of announcement. So with this IV has been super elevated for the last couple days at a very high percentile. Then, of course, what we call the IV crush or the wave coming in, it literally drops till well below some very key levels. Not substantially. Again, it still comes in quite a bit. Again, especially if you're buying weekly options, it literally has came in a smorgasbord of amount of volatility. So we can see that here. We again via Tastyworks, so you can see with the affiliate link down below. So this individual bought on October 23rd on 2020. Again, he bought the $500 call, so it's all the way up here. So that option is going for about 3 to 4 cents right now, and the probability of profit is less than 1%. And it's definitely been very much killed off. All right, so we can view it by just right clicking on it. It says view the option in the chart, waiting for data. Bada boom, bada bing. Of course, you see this at a 3-year. Let's just go to like a hourly. So we're looking at basically going into earnings. We've seen that's continuing to drop off, of course, with the implied volatility going lower as well as, of course, has really just shrank this low. Let's actually even go into a smaller time frame. Let's just do like an hourly we talked about. And then we're just going to be basically doing this at like a 2-week cycle. So again, leading into this, again, the IV was inflated. A lot of things were going forth. A lot of potentially moves could happen. Of course, coming into the later stages of earnings, of course, earnings was yesterday. So that was the 21st into that close. You see that it was still coming through. So that contract was trading for around $1.40 to $1.23 in around that range. But then once the expected earnings came out and everything was kind of depending on the way you looked at it wasn't up to expectation. It didn't fly up to the $500 strike price. That literally option just deteriorated and just literally lost all of its value and its probability of profit in being in the money or even anywhere near the money as well. So that is definitely what we're looking at here. So we're seeing again, the current price is around 428, 430. Of course, we are a mile away from that currently right now. They're saying the overall, again, delta is at a still at a somewhat elevated level because it is Tesla. But again, you have about a day left of this options. It's going to expire most likely worthless. Anything can happen. Tesla can come out tomorrow and saying, hey, everyone in America is getting a free Tesla. Of course, the stock, I think the stock would probably flop because I don't know how they can afford that. But anyways, they could do something and really move the meter in either direction, and that still could run up to $500. But the likelihood, what the market makers are suggesting, is a less than 1% chance. So that is a pretty significant chance, right, of it not happening. That being said, here, what could have done differently? What should he have looked at? Maybe looking at some other parameters. What he could have done, he could have sold that $500 call and collected a little bit of premium. He could have done, not even looking at the $500 call, he could have bought options that were further in the money. So he could have bought something that was in the money, that was basically at the 420 strike price or above. But again, you're going to be paying a much higher premium for those because those were actually in the money currently and still are today. But again, that being said, a lot of those lost a lot of juice as well. So very difficult times, especially when you're just trying to understand these options, and be very careful. It actually really bothers me where I'm seeing these folks literally just throw away cash for no apparent reason, just because they think they can make a quick buck because for whatever reasons. Like it's honestly a little scary that people can just really just throw money away and just so willy-nilly and just really not give a rat's what. I'm not sure. Pretty sure he's pretty ticked and pissed off that it didn't work out. But I think if the individual knew a little bit more about options, if he just bought the stock, he would have been better off with that capital. So that being said, hopefully this was somewhat educational, that you learned something. If you haven't already, please don't forget to hit the like and subscribe, and I'll definitely catch you guys on the flip side. Don't forget, we have the Discord link down below if you want to check out the Discord there. All right, guys, have a fantastic day, and I'll talk to you guys soon. Peace.